Hi everyone, I hope you are safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy, Chapter 3, the books of prime entry. In accounts, we have two approaches. That is the modern approaches of accounts and the traditional approaches of accounts. Under these two approaches, we have to follow twofold aspects. In journal entry, we have to record all the business transactions in the books of accounts. In accounting transactions, we follow double entry system. What is double entry system? What double entry system says? Each and every transactions of the business has twofold aspects. What are they? They are debit aspects and the credit aspects. Both of them always should be recorded. Both aspects are always to be equal. Debit is always equal to credit. So now we are going to discuss in detail about how to enter 5 classifications of modern approaches of accounts with the rules of debit and credit. And already we are knowing very well about assets, liabilities, capitals, revenue and the expenses are the 5 classifications of modern approaches. Before we are going to enter the book, all the transactions in the books of accounts, first we know very well about what is debit, what is the meaning of debit, what is the meaning of credit, how to pass the journal entry with the rules of debit and credit, when it is to be debited and when it is to be credited. If we know very well, if we understand very well and if we understand properly with the rules of debit and credit, then only we can pass the journal entry very easily. So first of all, we are going to apply each classifications of modern approaches with the rules of debit and credit. Okay. So first take asset. How to apply the assets with the rules of debit and credit? So asset has debit balance. Say for example, what are some examples of assets? Land and building, plant and machinery, furniture and fittings, computers, cash, stocks, gold, jewels, gold, cars, houses. These are some examples of the assets. Take for one example, furniture. In your business, if you purchase furniture for cash, so listen here carefully, furniture is the assets and cash is also an asset. Okay, so if you purchase furniture for cash, furniture come to in your business and cash goes out from your business. So whenever furniture, when you purchase furniture for cash, furniture comes in. So your assets are increasing. So when your assets are increasing, what you do? You have to debit the assets account. That means you have to debit the furniture account. At the same time, when you purchase furniture for cash, okay? So furniture come to your business and the cash goes out from your business. So cash is also the asset. Okay. So if cash goes out from your business, what happened? Assets are decreasing. Whenever assets are decreasing, what you do? You have to credit the assets account, which means you have to credit the cash account. So listen carefully. Whenever assets are increases, you have to debit the assets account. Whenever assets are decreases, you have to credit the assets account. That's all. Then come to next classifications of modern approaches is liability. Liability has credit balance. Say for example, bank loan is the liability. If you borrowed loan from bank, your liabilities increases. So whenever your liabilities increases, what you do? You have to credit the liability account. That means you have to credit the bank loan account. In future, you have to repay the loan to bank. You have to pay the loan back to bank. What happened? Your liabilities decreases. Whenever your liabilities decreases, you have to debit the liability account. So listen carefully. Whenever liabilities increases, you have to credit the liability account. Whenever liabilities decreases, you have to debit the liability account. That's all. Then come to next classifications of modern approaches is capital. How to apply capital with the rules of debit and credit. So before that, what is meant by capital? Capital is nothing but the money which you invested in your business, So that is called capital. So whenever capital comes to your business, your capital is increasing. Okay. So capital increasing, what you do? You have to credit the capital account. Whenever capital is decreases, what you do? You have to debit the capital account. So listen carefully. Capital increases, you have to credit the capital account. Capital decreases, you have to debit the capital account. That's all. Then come to next classification of modern approaches, the rules of debit and credit. That means revenue. How to apply revenue with the rules of debit and credit? Before that, what is meant by revenue? Revenue means income. Say for example, sales, rent received, interest received, interest from investment, okay, and discount received. These are some examples of the revenue. So whenever revenue increases, what you do? How to get revenue, earn revenue from your business? Say for example, if you sell goods, from that sales you generate revenue. Okay. So if your sales increases, if revenue increases, what you do? You have to credit the revenue account. You have to credit the sales account. You have to credit the interest received account. You have to credit the discount received account. Okay. So if revenue is decreases, what you do? You need to debit the revenue account. So listen carefully. Whenever revenue increases your business, you have to credit the revenue account. Whenever your revenue decreases, you have to debit the revenue account. That's all. Then come to last classifications of modern approaches of accounts is what? Expenses. How to apply expenses with the rules of debit and credit? Before that, what is meant by expenses? Expenses means cost of operation in your business to generate revenue, okay, to generate income, okay. So the cost of operation. Say for example, purchases goods, rent paid, electricity bill paid, salary paid to your worker. These are some examples of the expenses. Okay. If expenses increases, what you do? If expenses increases, you have to debit the expenses account. Then expenses decreases, what you do? You have to credit the expenses account. That's all. So listen carefully. Expenses increases, debit the expenses account. Expenses decreases, credit the expenses account. That's all. So I hope you understand very well about the how to apply the 5 classifications of modern approaches with the rules of debit and credit. Okay. In next video, we will discuss in detail about how to transactions of the journal entry. Take care. Thank you.